I walked into work last night and felt like I was in a candy store because the markets presented a great trading opportunity that doesn't come along very often. What I'm referring to is the shorting opportunity that presented itself last night in the Euro US dollar. Last Friday, we can see that this market rallied up into significantly overvalued. I'm going to go ahead and increase my bar spacing here so we can see that clearly. That's represented by this top red bar segment here. And typically, this market trades less than 2% of the time in this extremely overvalued territory. So that's noteworthy. So the euro currency rallied up into past moderately overvalued, which is the yellow segment, into significantly overvalued. And that gets my attention by itself. And I'll tell you why. You can see over time that when it tends to hit that level, there's a good chance that the market will do one of two things. There's a good chance it's going to be a full-blown reversal, and that could represent an extreme price point, or there's a good chance that you'll see consolidation. So this was not the top, obviously, here back on the 23rd of November, but we did see prices repelled quite a bit off of that. So that's a high of, call it 129.90, and it went all the way down, corrected back to 128.79. So that is a 110 pip correction once that high valuation level was achieved. Notice that we also saw significantly undervalued here briefly on the 7th of December, and now we rallied back in last Friday, which was the 14th, into significantly overvalued again. Now, that's not the end of the story. What really got me excited was if you drill down the 30-minute charts, right here, this opening bar rallied right into significantly overvalued here and also registered a lower indicator histogram reading on the MQ momentum. Combine these two together and you have a beautiful bearish divergence here. So I actually initiated a short position up here. Very low risk. These often can be. Obviously, there's going to be times where they're not. You have to use stops and manage your risk in every trade for that matter when you're trading in the markets. But this, in my mind, is typically a high percentage or high probability trade, and it often can represent a low risk, high reward trade. Now, it hasn't done a lot so far, but it did as soon as it broke down through this bar. I like this type of setup here where you see the rally, one bar sideways in the 30-minute chart, and then once we broke down through that low here, that really sent things on its way. And that was 131.75, call it. And we ended up selling all the way down to a low of 131.47. So that's about a 30 pip sell-off. But I think that this market will end up selling off here and picking up some steam to the downside. Going back to the daily chart here, this is a very nice setup here as well on the daily basis, where we see a lower histogram reading and a higher price reading, which again supports the idea of a bearish divergence. So that, combining that with the intraday price action I just showed you on the 30-minute chart, this is a great signal. That's what I like to look for. I traded on that. I'm actually making money on that trade signal as we speak, and looking forward to making a lot more if this indeed represents a peak in this market. But that's it for this video. Good luck trading. Be sure to watch our upcoming videos talking about a lot more exciting and powerful ways to trade the markets. Thanks for watching.